Thank you, Gwen, and welcome everybody, and thank you for your attendance today. We're going to go through about 30 slides, but in fairly rapid order, and we're not going to talk about grades and the things that you've seen previously. So I have two objectives of today's presentation. The first one is to demonstrate to you just how important coal is as a world commodity, that it's a growing industry, and it's absolutely necessary for both the developed and the developing world. And if I can persuade you on those merits, I'd like you to think seriously about having some Morien Resources Corp in your investment portfolio. There's a lot of vested interests, NGOs, green-leaning organizations that will mislead you, and they'll make statements like are on this page. Coal isn't coming back, coal is in terminal decline. China's coal burning is in significant decline, and the end of coal is closer than you think. I think Mark Twain said it best, that the rumors of my death are slightly over-exaggerated. Here's a picture of a coal operation that shows some of the state of modern coal equipment. Here's where some of the stories and the perception comes from. From 1970 to 2000, coal was 28% of the global energy mix. In more recent times, and a little bit of extrapolation to the future, coal is 27%. And going to the longer term, it's anticipated that coal will be 22%. This is where the stories about coal in decline emanate from. Here's the truth. The energy pie, the consumption, has been growing at a dramatic rate. And coal is shrinking as a percentage of that large growth rate, but it's still increasing. It's just that other fuels are working their way into the mix. But we have rapid amount of demand for increased energy. I'll show you that on the next slide. This is the world energy according to region. The blue at the bottom is the Western world. But look at above that, the light blue is China, and then the other parts of the developing world. So the world is on a tear for consuming more energy. And coal is a big part of that. It's not the biggest part, but it's a big part, and it's a growing part. So going back to Mark Twain again, but there are three types of lies: lies, damn lies, and statistics. I'm going to show you a little example of how that works and the danger of somebody conveying to you half the story. This is a simple statistic that we're found easy to gather. Renewable energy demand grew 14% per year over the last 5 years. That's very interesting. It's very sort of compelling about the future for renewable energy. Guess what, folks? It's 4% of the world's energy supply. If you want the truth in energy supply and where it comes from, this is the chart you want to take a look at. On the right, in the low green bars, is the rapid growth of renewable energy. On the left, the tall three things are, and they're jagged at the top because they're annual, are coal, oil, and natural gas. So in this rapidly expanding demand for fuel, it's being fueled or it's being supplied by fossil fuels, and coal is a major component of that. One other comment about renewables is the easy ones have been taken. Hydro and the windier places and the sunnier places, they've pretty much been taken up. So renewables are going to get harder and harder to grow as time goes by, although technology will somehow offset that. This is a very modern hypercritical plant in Denmark. This is a coal-fired electricity plant, and you can see that it produces two things. It produces electrical energy, and it produces fluffy white clouds. This is not the haze over the city stuff that you can be led to believe. Let's talk about China, because China is the big coal consumer, but 400% growth in China's coal from 2010 to today. 25% expansion in coal capacity last year. 9% growth in China's coal imports last year. And then 45% of the world's coal generating equipment is Chinese owned or Chinese built or somehow tied into China, up from 37%. So they're the leaders in coal consumption and electrical generation from coal powered. And it's not just China, it's elsewhere in the world. 185 gigawatts of electricity will go into production in the next few years, and a gigawatt of electricity is maybe not an easy thing to understand, but in Turkey, Indonesia, Vietnam, and a couple other countries, that electrical generation capacity will equal the electrical generation capacity for the European Union. That's how much is going in. 700% growth in Egypt's use of coal, 50% growth in Japan's use of coal over the last 3 years. Fukushima led them to shutting down their nuclears. Guess what? They switch over to coal to supply the energy. They still need the electricity. $36 billion. Amount of money China institutions spent in 2018. HELE plants is what you saw a picture before. If you put up HELE plants, you have more plants because they're actually quite a benign way of generating electricity. But they reduce CO2 emissions by 40%. 78% of the new plants going in are all HELE plants. 95% is the amount of sulfur dioxide that's reduced through flue stack scrubbing. 38% is the reduction in nitrous oxide, NOx, while the growth in power went up. So they're reducing NOx while increasing the amount of power generated. So these are very compelling statistics about the power of clean coal technology. You wouldn't know it, but there's about 1,400 coal-fired power plants being built or on the books for the next 5 years. This shows the location of them. As you can tell, it's mostly the developing world, China, India, Vietnam, places like that. Because we're not seeing them here doesn't mean that the industry is in decline or going away. In fact, it's a very robust industry. It's just not robust in Canada and America. I love this picture, and we'll evolve a little story around this, but that is a steel skeleton for a building that's going up. We see these all around town all the time. Every ton of steel takes 0.7 tons of coal. Steel demand, as you see on that graph, is working its way up to 2 billion tons a year. So metallurgical coal needs to supply somewhere around 1.4, 1.5 billion tons a year to make all the steel. Here is sort of a current year and then a few years out forecast for steel imports for some of the major regions. And again, steel's going up, therefore coal's going up. This is a picture of Hong Kong. And the reason I showed that skeleton earlier was that I think a lot of us tend to think of steel as being refrigerators and cars. Probably every one of those buildings has a steel skeleton like was shown on the earlier slide. We're not stopping this construction. And so we're not stopping the use of steel. There's no replacement for coal in the manufacture of steel. There isn't another natural element that does the job that coal does. So we're going to keep building more buildings. They're going to keep having more steel skeletons, and we're going to consume more coal in vast quantities, billions of tons a year. And coal lends itself to getting on a boat. And if you follow any of the bulk commodities industries, getting on a boat is the cheapest way to move things around the world. And there's lots of coal near tidewater. Our mine is near tidewater. It's about a par 5 from tidewater. So it's freely mobile commodity, can go wherever the best prices are and where the demand is. I have an expression, coal is the new black. This is our share price from when we took the company public. We took it public a couple of months earlier than the left end of that slide. But this is our share price since we took the company public. This is a picture of our mine operation in Cape Breton. It's the Donkin coal mine. We have a royalty on the Donkin coal mine. Standing in front of it is somebody who's worth well over $1 billion. His name is Chris Klein. He's a self-made billionaire. I think 4th generation coal miner from Kentucky. He did a massive development in the Illinois coal basin in the 90s. He sold all that off about 5-10 years ago in pieces. And he's turned his sights to building mines in Canada. So he's built our mine, his mine that we have a royalty on, and he's got some assets out in the Rockies on the Alberta side. So what do we have? We have a royalty on the production from that mine. We get 2% of the first 2 million tons. We get 4% of everything after that. The more he expands it, the more 4% we get. The mine life's 25 years. It started production. This is in production. Started in 2017. We think it'll reach peak production in 2020, and it'll be about 3 million tons a year. This is a price for coal. The lower, heavier, darker blue is thermal coal, which is used for generating electricity. The upper, lighter blue trace is metallurgical coal. It's a more valuable commodity. It's a bit more rare as a type of coal. But I'd like you to start in the middle of that graph and go to the right and tell me that coal is in decline. This is not the price trace of a commodity that's going out of business or going in decline or its ending days are near. This is the price trace of a commodity that's in demand and growing demand. This is our royalties. We started out in first quarter of 2017. We got a check for $4,000. Last December, we got a check for $296,000. So this is the mine going into production. On the left is $900,000 is what we collected last year, calendar 2018. When the mine reaches full production, we've put some price assumptions in here, but this royalty could range at $5 million on low prices, $9 million on sort of medium coal prices, and could get to 14 in a really nice high-priced coal environment. So this thing's on a tear, and it's moving up. So why do you want to own our shares in our little company? First off, coal demand is robust. It's not going away. Secondly, we have one of the best coal mine operators in the world running this mine, putting his own capital into it. This is his own personal money that goes into it. Thirdly, we have a normal course issuer bid, and we're buying back stock. And the more stock we can buy back cheap, the more value there is for those remaining shareholders who don't sell to our normal course issuer bid. Since inception, we've bought back 17% of our shares. Next, the royalty goes up when Donkin production goes up or when prices increase. It's just the top line revenue royalty that we've got. Thirdly, second last point is that this royalty at $9 or $10 million a year is 1/3 of our market capitalization. So that's compelling. That's stunning valuation that we can have that. And then lastly, we have a fluid dividend program. When the royalty goes up and our cash flow goes up, we pay it out in the form of dividends. So we're a pure play cash pay on the coal business by way of this dividend. And that's my speech. Thank you very much.